much for bearing with us, ladies and gentlemen. The next session is about real estate. Working from home was toxic as many employees have tasted the flexibility of working from home, and many employers have also realized that office building to an extent avoidable expense. Given the tech advancements, many processes in any case be automated. While all this seems to have a negative impact on real estate, but the light emerges from the darkest zones, and that seems to be coming true for real estate. Now, on that note, our panel this time will discuss the opportunities and challenges for real estate in the new virtual world that is learning to work from home. Our eminent panelists, ladies and gentlemen, are Mr. Balaji Rao, who is the managing partner real estate at Axis AMC. He has joined the company in February 2018 and is responsible for driving the alternatives business. He's a veteran of the real estate industry in India, having over 25 years of in-depth knowledge of the property markets in the country. I'd like to extend a warm welcome to Mr. Rao. Let me now introduce you to our next panelist, Mr. Harish Nair, Executive Director Consulting, CBRE South Asia Private Limited. Now, he's an executive director with the consulting team of CBRE South Asia Private Limited and is heading the consulting business for CBRE in India. He has been with CBRE for over 18 years and has been instrumental in building this business and adding value to a variety of clientele in the Indian subcontinent and international markets. I extend a warm welcome to you, Mr. Harish Nair. Let me now take this to the moderator. The discussion is going to be moderated by Mr. Ashwin Chadha, the president of Indian Sotheby's International Realty. Mr. Chadha is a seasoned private banking veteran and a wealth management specialist with over 2 decades of experience in transactions and advisory. He began his career as a private banker with BNP Paribas, and then he moved on to spend more than a decade with Citibank as a banker. Here he handled a plethora of assignments ranging from wealth management, commercial banking, and running the North India franchise before he went on to be the head the investment agency division for Citibank India. And he also then moved to private banking with Barclays as a director, this being his first love and passion until he decided to take the inevitable plunge into entrepreneurship. A warm welcome to you, Mr. Ashwin Chadha. We are so delighted to have you in our midst and such a pleasure that you're moderating for us. Thank you for accepting our request. And the session is all yours, sir. Mr. Ashwin Chadha, ladies and gentlemen.
Thank you so much, Ashwarya, for the illustrious introduction for me and my co-panelists. Good afternoon, everybody. A very warm welcome to all. Today's webinar theme, as Ashwarya mentioned, is opportunities and challenges for real estate in the new virtual world that is learning to work from home. While Ashwarya did put a brief introduction, but let me give my 2 bits on it as well. So if there is one sector which has been affected in more than one way than just a bottom line impact during the pandemic, it's the real estate sector. A shift to work from home and a new virtual and digital way of work has been a tectonic shift for the sector. A huge positive for the residential real estate, but not so great for commercial, especially the office market. Today, as the pandemic is easing, most companies are grappling with the question on whether to return their people and workers to their physical offices or to stay with remote working or having a combination of remote and on-site working, also known as the hybrid virtual model. I'm going to delve deeper today on this topic of opportunities and challenges for real estate in this new virtual world with the 2 of my panelists. I guess the introduction for the panelists is already with you, so I'm straight away going to head and get into the questions. Just from a housekeeping perspective, we are hoping to keep this session within the 40 minutes allocated. We aim to cover the discussion in the first 25 to 30 minutes, followed by sort of a Q&A for the last 10 minutes. So I would request viewers to keep posting their questions as we go about the session, or if there are any questions that are already populated, Aishwarya, you could share that with me. So my first question goes to Balaji. Balaji, all of us have been forced to rethink our lives and priorities in this most difficult year in our living history. But it's remarkable, isn't it, on how well we've all adjusted to the new virtual world and the work from home, or should I say, work from anywhere concept. What are your thoughts on it?
Uh, Thank you, Ashwin. Thank you, Aishwarya. I hope all of you all who are attending this seminar are safe and sound in your homes. So yes, I think human beings are highly adaptable, and we have adapted very well to the virtual world. And a conference like this that could never have been thought of a year back, today is almost a byword for all our sort of meetings and seminars. So I agree that we have all adapted, but what does it mean as its impact on real estate? As everybody says, that it has had the major impact on real estate. What does it mean? Real estate first has to be understood as 80% in India, at least the Indian real estate, so comprises of the residential real estate. Only 20% is what we know as the commercial, office space, retail, warehousing. So predominantly residential real estate dominates the Indian real estate landscape. And as far as residential is concerned, it has really hit a home truth, unintended, that you really need to look after your home. Because if we are all sitting in a house, what we have always neglected is whether we do have the space, the facilities, the infrastructure to work from home, because we never needed to ever do it. But today it has come to us that yes, we need to create spaces in our house which gives us the requisite latitude and elbow room to be able to operate from this environment. And that's exactly, I think, which is going to help the residential real estate bounce back in from this. In fact, just before the COVID, we were already had almost, in my opinion, about a 6-year lull in real estate. The last peak we saw was in 2013. And after that, it has been a lull in a stagnant market. And people were getting pretty despondent about it because you had growing inventory, affordability was going up, mortgage rates were high, and people were just worried as to what the whole real estate scenario was going to be about. But lo and behold, as soon as we have had this COVID crisis, I think we have done a 180-degree turn and people are having a relook as to, yes, is this house good enough for me? Is this home good enough for me? Do I need a bigger house, whether I have to rent it or buy it? And does it have all the facilities and infrastructure necessary to be able to continue doing my business? So I believe that you will see in this year and the year following a huge resurgence in residential real estate. And people are looking to buy. And if these last few months, if we look at what has happened on the registration front and also on the sales, we can already see that rebound coming through. And we are almost coming and picking up the pace of pre-COVID times and even crossing that. So I believe that this is a real shot in the arm for residential real estate. It's not just a silver lining, but this is really going to be the booster, the catalyst for us to go back to our drawing boards and rework on all our investment strategies to say where does residential real estate figure in all this. And we are very bullish on it. I am very bullish on it. I'm very confident that we will see a big resurgence of residential real estate, and it is the place that is going to be. As far as the others are concerned, as we go along in the seminar, we will discuss about commercial and retail also, I'm sure. But at the moment, the predominant dominating factor of real estate being residential, I can be absolutely confident to tell you that you are going to see a resurgence, you are going to see a rebound, and the residential real estate volumes are going to pick up, and investments in residential real estate would be a very safe harbor.
Okay, that sounds like, the lull before the storm. And I guess we are all then looking forward to the storm in the residential real estate sector. Harish, what are your views on what Balaji mentioned?
So and it's a great question and an even better answer. Let me just touch upon some of the things which Balaji said, and I'll also talk a little bit about the commercial space. Uh, I think residential, has seen a lot of recovery, especially post the lull and the COVID, right? So like Balaji was mentioning, the sector was seeing a huge period of lull, and especially true for markets where investment sales were high. So people were using the wait and watch approach to figure out what they wanted to do as far as residential real estate is concerned. The interesting number for me was I was reading that there was an 86% surge in residential offtake in the last quarter vis-a-vis the quarter before that. So there is definitely an increase in demand for residential space, and which is a good thing. And when we speak to developers, something which comes out is that people now are talking about, so earlier they were talking about a 2 and a 3 BHK as the prominent sectors. Of course, you had the 4, 5 and 6 BHKs as well. But those who used to have the 2 and 3 BHKs in mind, they now want the 2.5 and 3.5 BHKs, primarily because they want to get that additional flexibility of having a space which they can convert to, a safe harbor where they can work from home. So that's something which we're seeing. And of course, that's aided by all the other factors in terms of reduced mortgage rates, reduced stamp duties in some states, whichever states have actually reduced or done away with stamp duties for a limited period of time. We saw a huge amount of, or a huge jump in registration of these properties. So that's been a strong indicator that this segment is poised for a turnaround. Of course, there will be changes post-COVID, post the change in environment which we witnessed over the last 1 year. So which is why now people are asking for that additional half room which they can convert into a work from home space. So that's a reality. And of course, we're seeing that now over the last 1 quarter or 1.5 quarters, which we expect to see increased over the next couple of quarters as well. So normalcy, of course, will return once majority of the people get vaccinated and people, the economy limps back to normalcy. So at that time, we do expect things to be business as usual, so to speak, on all fronts. But another thing which has helped the residential sector was when people spent more time at home in the last, I would say, 1 odd year, 10 odd months, because they were not commuting to work, because they had a sudden increase in disposable income, because they didn't have to spend on items such as fuel or going out and F&B, entertainment. So they had a lot more disposable income, and that's when people have realized that spending money on a good house will make a huge difference for you in the future as well. And which is one of the reasons why we've seen that uptick happening in the last quarter and I would say half a quarter before that. So that's something which is expected to continue. That's as far as the residential segment is concerned. On the office, interestingly,
so Harish, I'm going to stop you there. We'll just come to the office segment.
Sure.
But what I hear you say is there has been an uptake, and we are already seeing sales for Q4 2020 up by 86%, as you mentioned, over the previous quarter. I want to just bring in one more aspect, which is on residential, and then we'll move to the other sectors, which is a news that came in yesterday. Wherein the Delhi government is planning to bring down their circle rates by 20%. So how do you think this is going to augur for the residential market in Delhi, considering our somewhat successful experience that we've had in Mumbai?
So that's part of the initiatives which is talking about, which is reduced circle rates, reduced stamp duties, reduced mortgage rates. We've seen a huge fillip as far as particular states' local markets are concerned. So like we've seen with other states, we expect some kind of fillip in the Delhi NCR market as well. I say Delhi NCR because till now, of course, the lifeline for real estate has been NCR per se, not so much Delhi, primarily because Delhi has been landlocked and a lot of the space was already developed. But the good thing is, with this reduction in circle rates, a lot of people who are actually wanting to do transactions but couldn't do so previously, they come back onto the table, and we will see a definite uptick on transactions taking place. A lot of the new launches which we're talking about in Delhi actually happens in the larger NCR region, which is parts of Gurgaon, parts of Noida, and we do expect that to see an uptick as well.
So, Balaji, I'm going to ask you to wear your, chartered accountancy hat and comment on the reduction of this circle rate by 20% as to how it is going to ease things from the seller's perspective and buyer's perspective.
Yeah, good question, because basically what was happening is, because we have a tax provision which says that even if you try to sell below the circle rate or the ready reckoner rates, the tax authorities were going to consider that rate to have been the sales price or the purchase price, and
Right.
we accordingly. So this was creating a lot of problem, and pre-COVID, no government authority was really willing to say that the prices, however stagnant the markets are, the price was going to come down. So they were always raising the price, or at the best keeping it stagnant. So thanks to COVID, I think the government authorities are agreeing that yes, prices can come down. It is a market which is driven by the economic factors of demand and supply. And if prices do come down, they should not be penalized by the tax authorities as having taken some sort of a cash or black money in the transaction. So the circle rate is connected to what happened in the budget also, where they have agreed to increase that sort of a discount you can take to the ready reckoner rate, so that you have now a good buffer of almost 30% from a
Right.
ready reckoner rate to be able to sell a flat or a property, taking into consideration the demand and supply. So when we say that there will be a resurgence in real estate, I'm not saying that the prices will gallop. I do not want investors to rush into the market. I'm saying that the volumes will start gathering pace, because the market should remain stable and it should not become speculative. But from a long-term investment point of view, we are seeing prices which are very attractive, and somebody who is an actual user or a long-term investor will definitely gain from entering this market at this time. And the tax authorities are also very supportive of it, and the government authorities are also very supportive of it. That's my take from this.
Thank you so much, Balaji, for clarifying that. And I think the unanimous consensus within the panel is that, residential is, at least we're seeing those sparks, and we hope to see them sustain in 2021 and 2022. Moving on to the other segments, which is, specifically the office. Do you believe that with a large number of corporate occupiers now comfortable with this work from home concept, they may surrender more office space going forward to save costs? Or how do you see office demand going forward?
See,
Balaji?
definitely there will be certain changes in the office segment. I'm not going to ever say it will come back as business as usual. I don't think it will completely shrink in its footprint. There will be a lot of restacking and rethinking going on as to whether certain spaces can be given up. But overall, I don't think the office segment will suffer, because what we are forgetting is India is bound to rebound almost as a V-shaped recovery, as all our ministers are saying. And I have full faith and confidence in that we will have a nominal growth of almost 15-16% when we rebound. And that sort of a nominal growth requires more services and more space. So I don't think that you will see a shrinkage of the footprint of the office space at all. And the continuing success of REITs, and as we say, even Brookfield REIT just closed, got oversubscribed 8 times.
8 times.
So the continued success of REITs only indicates that I don't see too much of damage to the commercial segment. But yes, will there be changes within the commercial segment? Yes, there can be changes, because I think the design, the nature of the office, and the way it will be looked at and it will be utilized will be very different in the post-COVID, where I'm quite sure we will have a sort of a hybrid model working, where offices will be used more for collaborative purposes rather than just for giving it as a desk for the employee to come and use it rather than sit in his house. So I have a feeling that there will be a sort of a change in the way we approach office space, but I'm quite confident that overall office space will not shrink, or the offtake of office space, which we see year to year on a net basis of almost 35 to 40 million square feet in India, is not going to just disappear overnight because of the growth which will come back post-COVID.
Sounds good. So Harish, talking about, Balaji hinted on this collaborative or this hybrid work model. And my question to you is, in terms of the way forward, getting on-site, off-site work equation right has its own challenges. Some people may never want to come in. Some people may want to come in on all days. HR has their own view in terms of this balancing act is not going to be very simple. As a consulting expert, what would be your views?
First of all, I can't agree more with Balaji, because while yes, last year we took a big hit on commercial real estate, there is no way that this segment will not do well, primarily because of what he spoke about the V-shaped recovery. You have economic activity happening, you do need space to be able to service that activity. And interestingly, we had done this survey, I think October or November of last year. So that's about 2-3 months back. And already there was a lot of end user fatigue setting in for this working from home aspect. So while it's possible for, a lot of corporates to work from home, depending on what they do, it's very difficult for others to continue to work from home. They have to come back to office, and they need that environment to be able to perform the services which they want, which is one of the reasons why we feel that while yes, there is bound to be adjustment in how the office space is used, there will not be a significant dip. So there will be a dip, but there won't be a significant dip on office demand in the near future. And interestingly, about 65% of the respondents in that survey which I was talking about said that because they don't have a dedicated or ergonomically compliant workspace at home, or they were facing challenges with issues like data speeds or infrastructure, they were actually looking forward to working from office again. So that's a telling impact, if you ask me, on how I feel the office space is going to behave in the near future. And of course, the other big thing was on the work-life balance. There is no denying it. The minute we started working from home, I think even employers, tended to forget that you need to maintain a certain time so that people can have a good work-life balance. So that started getting impacted. And in fact, whopping 75% of the people said that they were getting impacted in some form or the other. So, some obviously might be more, some might be less, but they were getting impacted on a work-life balance perspective. So again, they showed their keenness on coming back to the office environment. So, I don't think we can do away with the office environment specifically in India. Maybe yes, if you had an environment or a setup where you could have done all your things which you do in office without fail from home, which means you have all the infrastructure readiness, you have 24 hours water, power, these kind of things makes a difference in the long term. And that's what, we've seen a lot of employees face issues with when they were working from home. So having said that, so I think, the office space will see a rebound. And, last year, of course, we took that hit. I think the norm was on a net basis. It was about 45 million square feet, or on a gross basis, it was about 60 million square feet of office space, which got absorbed in 2019. That dropped to about 35 million square feet in 2020 on a gross basis. So there was a dip, but that dip had largely to do with the fact that for almost 2 or 3 months, there was absolutely no economic activity in the country. and a lot of people were forced to give up that space. So the minute we see that rebound or resurgence in the economy, again, that space will be back in demand, and we will see a growth as far as office is concerned.
So I guess the view that is emerging is that we don't expect there to be a significant dip in office space offtake in 2021 and going forward. However, there may be some change in the usage of the space, and slowly and steadily, one will move to a hybrid model and then back to the office environment. That's what I hear, the view coming out from the two of you.
That's right.
So tell me, while we are all in the midst of this work from home concept, which is evolved, do you think there is a demand for holiday homes that has also been seen?
I would believe that these holiday homes, there is a demand today because people want to get away, and there is what they call the revenge travel, and you want to have staycations and stuff like that. So you want to get out and be in a second home. But truth be told, most of the second homes, except for the very affluent, become like white elephants to maintain and really look after. And with a lot of these Airbnb sort of alternative platforms offering you those, to buy a second home, I don't see, except for the very affluent, to do it. But as a commercial venture, will resorts and second homes and all that do well? Yes, they will, because it has to be done in a more professional and commercial basis. And people would like to get away on weekends, especially if they're cooped up in the house and the work is also from the house. You do want to take a break over the weekend and get away. So second homes will always be there, and it will become bigger and bigger, but not as an individual investment, in my honest opinion, but more as a commercial venture by the hospitality firms and by these platforms to really take them into account. That's my view.
So, just on that note, Balaji, we conducted a survey at Sotheby's International Realty India, and this survey was done with a very select group of about 100 ultra high net worths. And how we define somebody in that category is with a net worth of over 30 million US. And the results were very telling. 70% of the people desired to upgrade their home, and of that 70%, half of them were looking to move to a bungalow style, farmhouse style living within the suburbs in the city, and the other half were looking to buy a holiday home. So, I think the ultra, if you look at the ultra high net worth segment, that's a segment where considering maintenance, upkeep, running of the property is not so much of an issue. They are desiring more for buying of their second homes, holiday homes. Whereas if I look at the mass affluent or the high net worth segment, probably they want to go in for more of the vacations, taking those staycations and that kind of a thing.
Correct.
Harish, would you like to add to that?
I think we've seen this second home concept taking off very, very recently, and the segment which has been buying them have been guys who can afford a second home while they were already having a first home in a urban setup. So typically your I won't say affluent people, but all HNIs, and of course the segment which you're talking about is significantly rarefied. But if I was to drop it as well, so there are a lot of pockets in India where people have been focusing on second homes as well. But having said that, I think in the last 1 year, we've hardly seen any movement in that segment, primarily because people were focusing on, either locking in the space that they needed in the immediate vicinity, or because they were trying to balance out their financing, in a really tough time. So yes, of course, the really affluent, they're always looking for good investments, and for them a second home makes a lot of sense. But I think for the larger audience, it's not something which people have not done, and it's not something which people are going to give up easily. But I think prioritizing will be key here. So probably by, from 2022 onwards is when we will see people focusing on that segment again.
Got it. So changing gears, we've seen e-commerce has been a big gainer in this pandemic, and with it, the entire warehousing piece has become an interesting one. Balaji, what are your views on that?
I think it's going to grow in a big way. It's at the moment, it's a very small segment if you look at the overall numbers. And both retail as well as warehousing, they're small numbers. So as e-commerce will pick up, and is bound to pick up by leaps and bounds, this logistics, warehousing, all these segments are bound to do very well. So I have a feeling that you will see a huge growth in that, but one has to be careful when we get into it as to which are the nodal points where one has to invest in that logistics and warehousing, and whether they're good operators along with it. See, one of the main themes I feel of real estate going forward, both in residential as well as in any other smaller segment, is going to be what we call service real estate. Real estate with services. It's not going to be pure and simple brick and mortar, something which is sold and walked off. And if you look at previously in the logistics and warehousing, that was what was going on. It was very, very basic sort of godowns being sold or leased out. I think that's going to evolve into cold chain, logistics centers, fulfillment centers. So I have a feeling this will grow in leaps and bounds, but it needs to have good operators, and you need to be very careful about which locations you choose for doing these investments.
Harish, what is your take? This is a part of your consulting domain.
It is, and in fact, we've seen a huge change as far as logistics is concerned over the years. And, maybe about 10 years back, we used to talk about warehousing as an alternate asset which you can evaluate for a short term before that location becomes prime. Today, a lot of the investors, operators, occupiers, they're talking about prime logistics space where they can operate out of on a day-to-day basis. So that's a huge sea change, which also brought about a change in the kind of quality and size of space which is offered. So earlier on, we see spaces of 30, 40,000 square feet as really big spaces. Today, people are talking about 300 or 400,000 square feet of space as big space, right? So a lot of the e-commerce players land up asking for 500,000 square feet box. So, that's obviously very, very rare to come across in the country today. It typically has to be customized, for individuals. So that's something which we're seeing more and more of in the current context. I think, obviously just before the COVID happened, we had a lot of things going right for this segment in terms of GST happening and, a lot of influence from international markets on the kind of space which people are occupying in the country, which tended to influence the kind of space which was built out. And of course, with the COVID happening, increase in online sales, a lot of these e-commerce players asking or increasing their demand, a lot of other people moving to online platforms, a lot of retailers moving to online platforms, the need or the ask for warehousing space has gone up significantly. And because of that, you've seen a lot of organized player actually coming into the market. And by organized players, I mean both developers and funds. So funds who are focused on doing warehousing or logistics deals, as well as developers who are focused on developing only warehousing parks or logistics parks across the country. And of course, there will be evolution of that as we go along. Like Balaji was mentioning, cold chain is the next big wave. So we're seeing a lot of inquiries, a lot of developments happening on that front as well. So as and when we progress, maybe about 4 or 5 years back, people were talking about FTWZs as a big thing. So yeah, that's something which is evolving continuously, and you have to be really careful about where you come up with that space, because you have to get the infrastructure right, you have to get the connectivity right, you have to get the buyers and sellers have to cross through that location.
Supply chain.
Yeah, so for it to be successful, so a lot of things have to go right for a place to evolve as a warehousing hub.
But generically, you feel, both of you feel that there is a thumbs up for warehouse management, and it's more about, the micro market. Each micro market will play out as per the advantages that it presents.
Absolutely.
We have very limited time left. I'm just going to take one last question. So of late, I came across this interesting fact that alternative asset allocation in the overall asset management industry in India is about 1% versus a global benchmark, which is in double digits. So my question to both of you, first Balaji, is that do you think real estate is likely to become a financial asset class under the alternative asset category in the times to come?
Absolutely, because I don't think real estate can be treated as a generic commodity. You will have a financialization of real estate, and I strongly believe that as an alternative asset class is going to grow and grow pretty exponentially. Because I think investors who have tried to do this by investing in physical assets sometimes don't get it right, because whether it's your due diligence process or whether it is your asset management process or whether it's the operational issues, it can trip you up pretty badly. So it is good to have fund managers. It is good to have it as a financial product where people can exit. There is a market and it has liquidity. And the prime example of this is the REIT, which we are looking at, which gives you the liquidity, which gives you the ability to ride on the back of a fund manager and a good developer and a good operator. So I'm absolutely confident that this growth will be there in the next decade for us to see.
Thank you, Balaji. Harish, what are your thoughts on that? And if you could also, very generically touch upon, from a taxation perspective, the advantages or disadvantages of investing in a physical real estate versus a financial asset with an underlying real estate, and of course comparing it to the generic investments of equities, debt, or mutual funds.
So let me first touch upon what are the alternate assets or asset classes which you can invest in, as opposed to looking at real estate, right? So one of the reasons why, of course, you had REMFs or real estate mutual funds coming in a couple of years before our REITs, and REMFs were successful. But they were companies who were investing in real estate companies. So from a structuring standpoint, you had a lot which is happening there. But REITs opened up recently, and obviously both you and Balaji spoke about the successful Brookfield REIT happening recently, and where it got oversubscribed 8 times. It's just an indication of the appetite for people in something alternative, right? The big issue with real estate as an asset class was always the barrier which the overall corpus formed, on real estate investments. So you had to have between, let's say, at least a minimum of 1 and 10 crores, depending on the kind of asset which you're wanting to invest in. That has changed quite a bit. I think the threshold or the minimum amount for a REIT is 50,000. So it gives you access to that kind of space, which would have otherwise cost significantly high, for as low as 50,000, where you can buy a unit and then invest in multiples of that and own a piece of prime real estate which you couldn't otherwise have owned. And like Balaji pointed out, all of that is managed professionally by people who know what they're doing. So there's somebody who's keeping an eye on it on a daily basis. So that's why it is so attractive for investors. They have already seen the stock market, they've invested there, they've seen gold, they've invested there, and they're really hungry for an alternative, and which is where these REITs come in. From a taxation perspective, I think the good thing on REITs is that, from the way it's governed by the government, you're not allowed to hold more than 10% of cash as reserves within the company. So the rest of it is something which you have to dividend out. As opposed to holding on to normal real estate, if you want to get that kind of money out, you'll actually have to sell the real estate, and that means the liquidity becomes an issue. Of course, then you have the short-term capital gain or the long-term capital gain kicking in, depending on when you've acquired the asset and when you're selling it. But all of that, when you compare it to a dividend model which a REIT has to follow, it becomes so much more attractive. You land up paying only the dividend distribution tax, and I think the government has done something on that. I'm not really very sure. Balaji, I can request your inputs there. But REITs, it's a far more attractive option for these kind of people.
No, to just quickly add, because we are running out of time. See, taxation-wise, funds like AIFs and REITs will always be one up over physical asset owning. For as a simple thing, like suppose you own a physical asset and it is vacant, you'll still be taxed on the notional rent, which can be easily sort of taken care of by when you have it in a REIT or in a AIF structure.
Right.
So I think owning physical assets is being frowned upon by people, that government and the tax officials. So in the future, I would feel it would be far better and far more fiscally prudent to invest through funds.
So can we say that if you want to own physical real estate assets, please own it for your end use.
Yeah.
And if you really want to make an investment, then the right way to do it is through some of these, financial products where underlying is real estate, which give you a host of other advantages.
Absolutely. You hit the nail on the head. Absolutely.
I think we have only this much time today. Ladies and gentlemen, thank you so much. It's been an absolute pleasure. Thanks for sparing the time today. I hope the attendees as well as the attendees have been able to take away key learnings from this session today. I would like to thank all of you and my panelists, Balaji and Harish, for their inputs and support. Thank you so very much. And back to you, Aishwarya.
Thank you very much, Mr. Chadha. That was a wonderful session and so many insights to take away from there. Thank you to all the eminent speakers as well. Now, before the award ceremony, we do have a final session for the day by veterans who don't need an introduction, but I will be introducing them briefly, but that will happen after this break. So we're going to take a 2 minutes break. And once again, Mr. Chadha is there. All the other speakers of the previous session are there. Mr. Nair, Mr. Rao, thank you once again to all of you. I think you brought a lot of meaning to this deliberation.
Thank you.
So moving on to the final session.
Thank you very much.
Thank you. We have Mr. Karan Bhagat and Mrs. Radhika Gupta. There's going to be a one-on-one between them, steered by Mrs. Radhika Gupta. So I'm going to just request the viewers to give us a 2-minute break, and then we will come back and take you through that session. Thank you.